Hi friends, welcome to my YouTube channel Explore with me. Today let us look at the basics of income tax and tax slabs in India for the year 2021. And also let us look at smart ways to reduce our tax for this financial year. Let us first look at the tax slab for this year. For any taxpayer there is no tax till his income reaches rupees 2,50,000 rupees. And his income from 2.5 to 5 lakhs are taxed at a rate of 5%. Next his income from 5 to 10 lakhs are taxed at a rate of 20%. And finally any income above 10 lakhs are taxed at 30%. For senior citizens there is a slight change in the tax slab and the same is explained in this tax slab table. Now let us look at a sample tax calculation for an individual earning the following. Here we are making the assumption that only deduction 80C, which has a maximum deductible of rupees 1,50,000 and a standard deduction of rupees 50,000 via section 16 are considered. The tax can further be reduced via other sources which will be discussed in detail further in this video. Let's deep dive into an individual earning 10 lakhs. As per earlier slide he has a taxable income of 8 lakhs. The first 2.5 lakhs do not incur any tax. The next 2.5 to 5 lakhs incur a 5% tax that amounts to rupees 12,500. Post 5 lakhs the remaining 3 lakhs incur a 20% tax that amounts to rupees 60,000. Additionally there is a 4% cess tax of rupees 2,900 on the total tax incurred. Together the total tax amounts to rupees 74,400. Next let us look at an individual earning 15 lakhs. He has a taxable income of 13 lakhs. The first 2.5 lakhs do not incur any tax. The next 2.5 to 5 lakhs incur a 5% tax that amounts to rupees 12,500. The next 5 to 10 lakhs incur a 20% tax that amounts to 1 lakh rupees. The additional 3 lakhs over and above 10 lakhs incur a 30% tax that amount to 90,000 rupees. Additionally there is a 4% cess tax of rupees 8,100 on the total tax incurred. Together the total tax amounts to rupees 2,10,600 rupees. Now let us look at the various options available for us to reduce the tax further. I will jot down the points here and we will discuss the points in detail in later slides. The options for tax rebates are: first we have deduction under section 16, next we have the house rent allowance which is also called HRA, then we have the housing loan and also the famous section 80C. Continuing further we have the subsections of 80C which majors on national savings which are 80CCC and 80CCD. Then comes section covering medical expenses and those are 80D, 80DD, and 80DDB. Next we have rebates on interest on savings which are covered by section 80TTA and 80TTB. Finally other sections of 80E, 80U and 80G also covers the tax rebates. Let us now look into details of the various tax rebates available for an individual taxpayer. Let us kickstart first with deductions under section 16. This standard deduction replaced the transport allowance of rupees 19,200 and medical reimbursement of rupees 15,000. From financial year 2019 to 20 the deduction was increased to rupees 50,000. Let us next look into house rent allowance, also called HRA. It means the component of salary received towards the rent payment and is allowed as deduction from taxable salary under section 10 to 13A. HRA exemption is allowed least to the below, either actual HRA received by the employee, or 40% of salary for non-metro city, 50% of salary if the rented property is in metro cities like Mumbai, Delhi, Kolkata and Chennai, or actual rent paid less than 10% of salary. Let's now look at home loan related tax benefits. On availing a home loan you need to make monthly repayments as EMIs, which include two primary components, those are principal amount and interest payable. The IT Act enables borrowers to enjoy tax benefits on both these components individually. 1. Section 80C claim a maximum home loan tax deduction of up to 1.5 lakh rupees from your taxable income on the principal repayment. This may include stamp duty and registration charges as well but can be claimed only once. 2. Section 24 enjoy maximum deductions of up to 2 lakh rupees on the interest amount payable. These deductions apply only on the property whose construction is finished within 5 years. If it doesn't finish within this time frame, you can claim only up to 30,000 rupees. 3. Section 80EE first-time home buyers can claim an additional 50,000 rupees on the payable interest every financial year. The home loan amount must not be more than 35 lakh rupees. The property's value must be within 50 lakh rupees. Section 80C is one of the most popular and favorite sections amongst the taxpayers as it allows to reduce taxable income by making tax-saving investments or incurring eligible expenses. It allows a maximum deduction of 1.5 lakh rupees every year from the taxpayer's total income. The benefit of this deduction can be availed by individuals. 80C allows deduction for investment made in Employee Provident Fund, Voluntary Provident Fund, Public Provident Fund, Bank and Post Office Fixed Deposit for 5 years term, Life Insurance Premium, National Savings Certificate. Also it can be availed via principal in home loan, Equity-Linked Savings Scheme Mutual Funds also called ELSS. Tuition fees for children, stamp and registration charges for house property, Sukanya Samriddhi account, Unit-Linked Insurance Plan also called ULIP. This section can be used by an individual to save additional 50,000 rupees on tax over and above rupees 1.5 lakhs that can be availed in Section 80C. The 80CCD covers the below. 1. 80CCD1 Deduction for NPS. Maximum deduction allowed is least of the following. 10% of salary. 2. 80CCD1B Deduction for NPS. Additional deduction of 50,000 rupees is allowed for amount deposited to NPS account. Contributions to Atal Pension Yojana is also eligible for deduction. 3. 80CCD2 Deduction for NPS. Employer's contribution is allowed for deduction up to 10% of basic salary plus dearness allowance under this section. Benefit in this section is allowed only to salaried individuals and not self-employed. You can claim a deduction of 25,000 rupees under Section 80D on insurance for self, spouse and dependent children. An additional deduction for insurance of parents is available up to 25,000 rupees, if they are less than 60 years of age. If the parents are aged above 60, the deduction amount is 50,000 rupees. This can be availed via medical insurance premium, central government health scheme, preventive health checkup, and medical expenditure for senior citizens. The 80DDB is available with respect to any expense incurred towards treatment of specified medical diseases or ailments mentioned in Rule 11DD for self or any of his dependents. It has a max deduction of 40,000 rupees for age less than 60 and rupees 1 lakh for senior citizens. Under Section 80U, a deduction of 75,000 rupees is available to a resident individual who suffers from a physical disability, including blindness, or mental retardation. In case of severe disability, one can claim a deduction of rupees 1,25,000. Section 80DD can be used for a disabled dependent. If the disability is 40% or more but less than 80%, then the fixed deduction of 75,000 rupees is applied. If there is a severe disability that is a disability of 80% or more, then the fixed deduction is set to rupees 1,25,000. Next let us look at 80TTA and 80TTB. You can claim a deduction of maximum 10,000 rupees against interest income from your savings account with a bank, cooperative society, or post office. But more importantly, remember to include the interest from savings bank account in other income. Section 80TTA deduction is not available on interest income from fixed deposits, recurring deposits, or interest income from corporate bonds. A new Section 80TTB has been inserted in Budget 2018 in which deductions with respect to interest income from deposits held by senior citizens will be allowed. The limit for this deduction is 50,000 rupees. Next let's look at Section 80E. A deduction is allowed to an individual for interest on loans taken for pursuing higher education. This loan may have been taken for the taxpayer, spouse or children, or for a student for whom the taxpayer is a legal guardian. ADE deduction is available for a maximum of 8 years, beginning the year in which the interest starts getting repaid, or till the entire interest is repaid, whichever is earlier. There is no restriction on the amount that can be claimed. The various donations specified in U.S. ADG are eligible for deduction up to either 100% or 50% with or without restriction. From financial year 2017-18, any donations made in cash exceeding 2,000 rupees will not be allowed as deduction. The donations above 2,000 rupees should be made in any mode other than cash to qualify for ADG deduction. Also, deduction under Section 80GGC is allowed to an individual taxpayer for any amount contributed to a political party or an electoral trust. Thank you for watching my video. I will be posting more videos in this tax series with even more details on individual sections and smart ways to save tax. Please post your comments if you want more details on specific rebates or tax sections. Please like, share and subscribe to my channel for more interesting videos. Thank you.